The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 124. We get the Nasdaq up 58. S&Ps are up 14. Gold contract up $5, trading at 13.06. We had it up to 13.13. They're fighting every time up there, man. Those bulls and bears are fighting big time. Silver, different animal. Silver's up 20 cents, trading $17.20. Light sweet crude up 30 cents, $66.93. Notes and bonds, deviant, man. They still want higher price, lower yield. And in this market, it's like, okay, you have the 10-year up 5 ticks, 119.11, 30-year up 12, 142.31. And King Dollar's got a monster bid. That's up 641 ticks, 93.340. Euro's getting smoked. That's at 116. The yen is out at 110. If we go over to Europe, you got the CAD up 1.2%. The DAX is up 1.5%. Bottom line is that everyone's happy out here.
I guess so. Green across the board, man.
Holy cow. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade, Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand how the strategies work inside the option market. You want to understand futures. Great program. If you haven't test-driven yet the Thinkorswim platform, it's a great platform. Come over to our website at TFNN, hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team each and every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
Hey, listen.
Say again, live from the TD Ameritrade home offices in Omaha, Nebraska. Getting ready for another swim lessons broadcast here. We're having a lot of fun today. How you guys doing?
I heard trader number 2 yesterday. That was a beautiful thing.
Yeah, exactly. So, today, what an interesting market today. Another Fed hike followed by a bond rally. Although the bonds, in all honesty, Tom, the bonds are significantly off their highs. They were up a lot more this morning, so they've backed off a little bit here. I think that that retail sales number may have put a little top into the bonds because, make no mistake, that was a powerful retail sales.
Oh, yeah.
Yeah, 0.8%. Expectation was like 0.4.
Yeah.
Yeah.
Yeah. The money is freed up. You know, the folks have opened up their pockets.
Sounds like it, man.
Yeah,
totally.
there's, and I guess it's really just going to be a question of, how long is it's going to just cash flow continue to go? The bond movement.
Think about it. How many times have you and I talked about this where we've talked about what if these tax cuts that hit the beginning of the year are just starting to really hit spending? And, and overall, if they're starting to hit Americans' pocketbooks, right, and starting to flush into this economy, that may be what you're seeing because, like we spoke about this morning, look at the last couple of Redbook numbers. The retailers, their sales are up. It's a 4 handle every week.
Yeah.
Those numbers, and all of a sudden we get this retail sales number, and it's a blowout number for retail sales. So you're right. The consumer drives 2/3 of this economy, and the consumer is out there.
And we haven't seen that in a long time.
Yeah.
I mean,
right.
It's almost feel like you can almost go back 10 or 11 years, which is like a flash. But, if we go back, it's 2018. We know from 2008, people didn't want to spend money because everyone got hurt so bad.
Sure.
So that,
And overall, all the forward-looking numbers for this economy, right? Look at what we had earlier in the week, the Small Business Optimism Index. That was a hot number, right? All these numbers are coming in big, Tom. I think all the forward-looking numbers, the consumer is out there going. I mean, you've got surely. I mean, the banks are going to be heavy today because bond futures are up and yields are down. So all the banks are going to struggle a little bit here because they trade so highly correlated to the 10-year yield. But besides that, this economy is firing on, I don't want to say all cylinders, but pretty close to all cylinders.
Well, what's intriguing, too? Of course, what ends up happening, with the 10-year is that we're at 119.11. You know, you're yielding, what, 2.8, 2.9, 2.95 actually this morning.
0.9.
The thing is, if that can ever stay there, you know, we talk about, retail, but that would mean that the housing would continue too. And the housing is, that's gigantic. I mean, that's $1 trillion business for the amount of jobs that get there. So this is really intriguing in itself. Do you know what I mean?
Yeah.
Because
it's just amazing to me from a trading perspective, Tom.
It is. It's deviant, right?
You get a rate hike yesterday. You get Jerome Powell's comments that were clearly hawkish, in my opinion.
Me too.
And Bob Bradley.
Listen, I had to put in the newsletter this morning, so that's what I put. I says, hey, listen, I thought the bonds were going to go up, but the reality is that was a hawkish statement, and guess what? The market's saying no. I think it was a dovish statement. I mean, the market's the market, right? You know?
Yeah, there wasn't much dovish about that statement.
No.
You know, when he's putting out numbers like a 3.6 unemployment rate and a 2.8 GDP coming up in the near future, there isn't much dovish. I don't know what if someone could find that as dovish. I did not see that as dovish.
No, I didn't either. No. There's no doubt. There's no doubt. I guess, and what was cool is that I can't figure out how they can project out so long, but they're saying that even from 2019 to 2020, they still only see like another 3 rate hikes in 2019. I said, well, this is intriguing. You know what I mean? That he actually went out that far, which we know things can change quickly, but I suspect market's looking at that too, saying, okay, well, is that normalization of rates? You know, I think that's what's...
And then there's Mario Draghi, Tom.
Yeah.
Who says, we're not stopping QE till December, and we're not raising rates anytime before a year from now.
Yeah.
Next June. I don't even buy green bananas and a year from now.
I know.
A lot can happen between now and next June.
Oh, for sure, man.
So
for
he's
sure.
giving himself plenty of rope to play with.
And you can see, you know, what happened, folks, is that put Europe on fire pretty quickly. Yeah. I mean, you know, Europe before this Draghi came out, Europe was down. It's like,
wow.
Right. Yeah, you know.
So we've got the Bank of Japan. You know, we know what's coming from them. They're pedal to the metal. We've got the U.S. Boy, I'll tell you what. Could it be, Tom, a scenario where the U.S. is the only real strong economy in the world?
You know,
hard to imagine.
Well, you remember, you know, if we go back 20 years, folks, what ended up happening, I mean, the world has changed then, but if we had a strong economy, we could push it right across the world. It just seemed to go that way. Do you know what I mean? Because there's so many people that, if that cash keeps getting spent, well, guess what? Then the next thing you know, that we start taking vacations everywhere. You know, people do more business.
Sure.
You know, if our currency's stronger than their currency, well, guess what? You know, like we were talking about, I got to go to Argentina. I mean, that peso is getting crushed. It's like, okay, you get a free meal going to Argentina.
Yeah.
You know?
They love you in Argentina, Tom. You cannot walk down the street.
Don't tell him that. He's going to be booking his flight right after the show, Kevin.
I'm telling you.
Perfect.
So, folks, live from Omaha today, 45 minutes. You want to hear a great show? You want to understand the option market, understand the strategies, and bottom line is that we get volatility out here, man. There's no doubt about it. Kevin, you have a great one, safe one, and we look forward to the show in 45 minutes.
For having me on, guys. Always a pleasure.
Thanks, Kevin. Have a great one, man. Have a safe one. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 111, Nasdaq's up 54, S&Ps are up 13. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 105, Nasdaq up 56, S&P's up 13. Man, we get a lot of things happening today, Tom.
Lots of green on that board.
Lots of green on the board. Let's go percentage-wise what we have up here. So inside the Dow Jones, you're up 0.4%. S&P's up 0.4. Nasdaq up 0.7. And as you just said at the break, we have the NDX up 100 points from the
overnight low.
From the overnight low,
yeah,
exactly.
So it's down at
71.93.
Yeah.
Look at that. 72.70.
Yep.
Unreal. And guess what? Bottom line, it's Wednesday. Natural gas.
It's Thursday, but that means it's natural gas day. That's right. We had oil yesterday. We got them on Wednesday. We get natural gas EIA inventories on Thursday at 10:30. And then jump over to Nadex. We got the chart up here. So we're looking at the July futures contract for natural gas. We're currently trading at 296.26. So let's look at setting up some possible trades in here with maybe some volatility ahead of these numbers coming out. It's just about 10:20 right now. We get the numbers for the EIA in 10 minutes from right now. And the first thing I jump to are the 11 a.m. expirations. So the contract's trading at about 296.26, just over 296. We have spreads that line up with 295. So these are decent in that you're going to be paying very little intrinsic value. But what's interesting, like right away, I know this is a pretty large spread. I mean, see how that's costing you 298, and that's probably going to recalibrate, all right. But you might not want to be bidding for that at 298 when it's only trading at 296, right? For example, let's jump. So those are the 11s. I'm just going to jump right to it because if you jump to the same contract, 297. That makes more sense, right? So you have, a bid offer that's basically straddling the underlying index, essentially, with a little bit of skew because the risk reward, but pretty close.
And you're at noon.
Yes. So with the noon contracts, here's your bullish spread. We have 295 up to 315, so you get 20 cents of movement. This one's going to be costing you $20 total. You're buying at 297, 2 pennies above the floor. And then on the bearish side, you're going to have 295 down to 275. This one being slightly out of the money, so no intrinsic value, all premium. It's costing you $8, so basically like 0.8 of a penny.
Right.
So $28 for both sides of that
It's not
trade.
bad. 2.8 pennies.
Yeah, 2.8
movement.
pennies. So even call it 3 pennies of movement you would need away from 295. So you're looking for either 298 becomes break even or 292 becomes break even on the downside. And these give you till noon. And we get those numbers coming up in about 9 minutes.
So let's take a look at one of the charts. Where have we been thus far today?
Sure.
Okay, so, there's been a spread here.
Yeah. And, you know, we're below, let's see where the low is, about 293.5. And just back in
297. That's what it looks like, right?
Yep. We bounced up just 296.9. I mean, a hair under 297. So we've had some volatility. We had quite a surprise yesterday in oil with a draw of like 4 million barrels. So we'll see if we get some kind of surprises today for natural gas.
And what was intriguing is that, you know, you have an oil yesterday, even this morning, you know, oil's still up, and you have the Russians and the Saudis coming out saying that, hey, they're coming into this Vienna meet and they want to basically produce more oil.
Okay.
Because they think that they want to bring the prices down a bit.
Okay.
You know, and of course that's going to be a big fight because, you know, that's great that they have so much oil, but the rest of those countries want higher price.
Sure.
They don't want to use all that good oil.
Yeah.
You know?
They want to be able to maximize what they're getting for every barrel.
Exactly. So let's just, I want to pull this up just on a daily basis and see where we've been. So 296, 297 is the high.
Yep.
This is gonna, okay, so this is always at a nice place when you're right near the highs. It's like, okay, you know, can you make it or break it? You know, the highs that we're looking at, folks, you had a high last week, 2 weeks ago at $3, and then we had a high going back in January of $3 and 3.01.
Yeah.
This one here is interesting, isn't it?
That's quite a bar.
It is.
What is the high there? 3 all the way down to 286. 14 pennies in one day. Pretty.
Wow.
Yeah, that was quite a day.
Yeah, that's 1,400 on a contract, folks. That's
on a futures contract.
Yeah.
Right? Yeah.
That's why you want a defined risk. That's a big number with defined risk, no doubt about it.
Totally. So it's 10:23 right now. We'll get those numbers at 10:30. We'll check back into it.
So let's go over to this gold contract. So it just doesn't stop. I mean, you get a seller, you know, in a big way that just doesn't want to see this baby get back in the higher range. And it's not personal, folks, but the bottom line is that you can see when it gets up there, there's some intense selling. That being said, what you have here is that you're pushing into this with volume. You know, last time we were up here, we had volume. They sold it down again. We had 362,000. We'll do 350,000 contracts today. So I like how that's pushing in there. Bottom line, we'll see whether it can basically get above it. The selling was pretty intense. And what you do have against it is good old King Dollar. Look at that move on King Dollar.
Move, man.
You know, actually, that's DX. We're moving over to the U contract. We're going from the June contract to the September contract. And you can see, you know, 37,000 contracts. That's big contract volume. So, you know, in that context, it's really not that bad that what what gold is actually doing.
Okay, with that type of huge move.
Yeah.
Right. No, yeah.
You know, silver, bottom line, keeps wanting higher price. You're up 1.35% this morning. You get 91,000 contracts. You can see that's going after that 1742, and it has the volume. And if we go to the SLV, I believe this one here just jumped over everything, meaning all of those moving averages.
Wow.
Which, you know, it did it yesterday, so that should put actually more juice behind it, because there's plenty of people that use those, you know, 50, 100, 200-day moving averages to basically get on a trend.
Yeah.
You know, so there's a lot of moving parts out here this morning. Actually, the TLT, that's what I want to look at too, because the TFT's up slightly. Nothing big, but it's not down. This is the same deal that you're looking at, saying, okay, the Fed's going up, but guess what? Notes and bonds, basically the TLT, they're buying it.
Yeah.
You know,
for sure.
Pretty cool.
It is.
Some of the higher volume equities out here this morning. Let's see what we have. Oh, Netflix is up a new high. Is it in there? I saw it this morning. No,
okay.
I'll just pull this up first.
Sure.
I think it's up another $5. Oh, $9. So
doesn't stop, man.
That $3.89 And I think when I did this yesterday, there's an ABC up on a monthly at weekly at 450.
Pretty intriguing. I wonder how that all factors in terms of the mergers going on, right? With AT&T, Time Warner, and then you have, of course, Comcast.
Yes. That's quite
Fox, Disney.
That's quite a bid that Comcast
65 billion, right?
Yeah,
65
cash.
For Fox and their media.
Yeah, 21st Century Fox,
yes,
right?
Yes.
And that's evidently the film library. The film library must be extensive.
And it comes with, I believe, 30% of Hulu as well.
Oh, right.
And so what happens is those players already, the players being Disney or Comcast, already own, I think, 30% of Hulu. So whoever gets it's going to own 60% of Hulu on top of everything else in that, right?
Stay right there, folks. Tommy and I are going to be coming back with those gas numbers. We have the Dow Industrials right now up 96, Nasdaq's up 62, S&Ps are up 14, gold up 530, silver's up 22 cents, and King Dollar up 781 ticks at 94,480. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So natural gas stockpiles rose 96 BCF. It looks like they were looking for, what, 91?
Yeah, 90 to 91, depending on Bloomberg survey had it 91. Median analyst estimate had it rising at 90. It comes in at 96 billion cubic feet. We'll jump back to the chart, see where we're trading. Get it over there. There we go. and quite a little drop. So when we pulled these out, the chart up, we were trading at 296 and change.
Yes.
And so we've spiked down about 2 pennies from that level on that news. Now, and we're accelerating as we speak. And let me just zoom in to get a better picture of where this is going. So what's a little bit tough is that if you had made both sides of this trade, you were starting with the heads up to the upside,
yes.
right?
Yeah.
So that's where the noon trade was going to cost us about $28. Call it 2.8 pennies, call it 3 pennies from 295. So we're already trading at 296 and change. You only had to get up to 298 to break up even on the positive side. You need to get down to 292 to break even on the negative side. I mean, what's always intriguing here is that this is your bearish spread. So this is the one with basically all the value in it right now because we're within that with intrinsic value. You could always be buying that back, take $15 off the table of your $28 investment, and then your bullish spread is going to remain active until noon. If you do get a recoil above 295, which we're right up against that point, and you know maybe if you are a little bit directionally bullish, right, or maybe you think that that's not too big of a number, that you might be looking for upside versus downside, just that you can trade this out throughout the day until noon.
Yeah.
And see what happens.
The noons seemed, it's nice having that extra hour, meaning specifically not doing the 11s and getting that extra hour.
It seemed to recently work out well in terms of we've gotten a lot of action even between the 11 and 12 Eastern time hours, even though we're getting the inventory numbers, whether it's for crude or for natural gas at 10:30. Man,
and in this case, the 11s really didn't work because the offer was too expensive, right?
Yeah. So the bid offer spread was pretty large there, and maybe that market maker just wasn't setting it correctly, but that's where, download the demo account, get used to it, and that's where, you know, we pulled it up. We said, that's a wider spread than we're used to. We jumped to the 12s. We gained an hour at a more affordable price. Gotta love it.
Totally.
We have Kay in Clearwater, I think. Let's jump over to Kay.
Morning, Kay. How you doing?
Hi, good morning. How are you guys?
Doing great. Yourself?
Good. So I'm interested in this, it's a pot stock.
And what's the symbol for it, Kay?
It's MCIG. It's a penny stock.
Let's see what we got here. MCIG. Okay, so they operate a cannabis cultivation construction company. The company services legal cannabis hemp, and the CBD markets in the U.S. There, and let's see this. So the low is 12 cents, the high is 42.
They get a market cap about 150 million.
Okay, so at least they have revenue. So they're doing, last quarter they only did 780,000. Okay, so let's take a look at this. So what gets you so interested in this?
Well, they make, you know, they make money, and they're kind of like, they're kind of like the pick and shovels of, say, the gold market. They're the construction aspect, and looks like the Senate just passed that they're going to open these things up, so they're not federally illegal.
So what I would say is this, like, I don't know whether they make money or not. I can't see that in their financials. But the PE is saying it's 1,165, and this is just a construction company. So I wouldn't wrap my head around this.
Okay.
You know, because that's all it basically is that, I'm sure they could do really well, you know, building out these places, but it's like, you know, there's plenty of construction companies around that build out CVS's and Walgreens and, you know, many of those. I mean, if you're gonna, let me just pull up, you know, so these cannabis companies have been, you know, on a run. And like, if you pull up Canopy is, that's weed. It's trading at $39. You know, I would wait for a pullback. I mean, you know, this thing, the high out here is like 44. You know, but what you do have in Canada is that yesterday, Trudeau, it looks like they're going to finally get this thing passed. Here it is right here. Trudeau's legal pot law finishes, nears the finish line. So what does happen in Canada, they plan on recreationally, this is going to be pushed out. And, you know, the actual companies that can make money selling it, that's where I would go, because that is going to be exponential. You know, it's just like a brand new business, like when probably the booze business got, you know, after Prohibition. Sure. You know, so I think
that's what I was looking at it for, just like a long-term kind of hold on.
Yeah, I think that the way to do it is that wait for a nasty pullback, and that might be month, 2 months, you know, whatever that is. But I believe that that's going to be a monster business, you know, because the spreads are there, the regulations are there. It's going to be a hard business to get into regulation-wise, which makes it, you know, a good business. Sure. So it's a defensible business, you know. The reason I brought up Canopy is that that's the first company that a big booze business had got into. Constellation Brands, I believe, bought either 10% of it or 8% of it. They bought something, and once it, you know, let's see, 9.4%. You know, so, you know, that's where I would go with that.
Okay, great. Well, thank you for taking my call. It was nice talking to you all. I met you in March.
Oh, so, yeah, sure. I remember you. Right.
Yeah.
Totally.
So, anyways, thank you for your insights. I appreciate it.
We appreciate you growling and prowling with us out here.
All right.
Okay.
Take care, Kay. Thanks.
Okay, we gotta go over to the Dow Industrial. Something just happened.
What's happening?
The Dow just went down 80 points.
It sure did.
So let's see. We just went from 25,332. Actually went down 90 points.
Yeah.
So who's the culprit here?
Could it be some of the banks?
Let's
JP Morgan up there?
Home Depot down negative 12. JP Morgan 9. Boeing 8. These are all negative points. Merck 5. This is strange. Let me just see this. That was a fast move, man.
Definitely. Yeah, we have the S&P's up about 0.4% right now. Nasdaq up 0.75%, but the Dow only up just under 0.2. Yeah.
So if we look at the diamonds just for a second. Yeah. So they sold it down. That's the bottom line. We'll see. I think this. It might take us that we're still going to probably stay higher, but the volatility is going to be here. And look at, you know, it's interesting. The dollar's still up 726 ticks, but yet gold is up 690.
Yeah.
Not the end of the world.
Hanging tough.
Hanging tough. Stay right there, folks. We're going to come in right back. We have the Dow right now up 34, Nasdaq up 53, S&P's up 9.5. We got a great guest for you. We got
Jack Gleason, Major League Trading.
Major League Trading. Our man, Mr. Jack Gleason's coming up to give you some color in the market.
There we go.
Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow up 32, Nasdaq up 49, S&P's up 8.5. They continue to hit this Dow, but Nasdaq is strong like bull.
Lots of volatility, man.
And when we talk about bull, let's go over to our man, Mr. Jack Gleason from Major League Trading. And when you go to MajorLeagueTrading.com, you're going to see that logo. I love that logo, man.
We'll put it up there for him. There we go.
Totally.
Perfect.
Jack Gleason, welcome to TFNN.
Hey, how's it going? Thanks for having me, guys. And yeah, speaking of that logo, I love it too. But it's apparently the MLB has a problem with it, so it's not all it's made up to be. I tried to apply for a copyright to it, and their lawyers had an issue with that. So I'm going through that process right now. But it's all right.
That's perfect, man.
Hey, listen, they're not in the market; they're in the sports market.
Yeah, that's what I said.
Totally.
Maybe they got confused with trading sports or trading. I don't know, players, I guess. But
sure.
Who knows? Let the lawyers figure it out. I'm not really too into that legal stuff.
That's right. So, Jack, tell us and tell the audience a little bit about yourself and, your Major League Trading.
All right. So bought my first stock when I was like 15 years old and been absolutely in love with the markets ever since. I used to read the Forbes 500 and I was like, what are these people doing to get so wealthy?
Yes.
Gave my dad about $400-500 that I'd saved up mowing lawns and bought a couple penny stocks, I think, when I was like 15, and you know what? They all went up and then they all went down, and I learned my first lesson in trading.
Yeah,
but a little bit of beginner's luck there. So that's kind of how I got involved in the markets, and then just being in the Chicagoland area, I work with Tom Sosnoff over at Tasty Trade. I had my own segment on a TV show called Get Trading at 22, which was pretty cool.
That's awesome.
Traded for family office out of Austin, Texas, worked for a prop firm in Chicago, and then in 2014 I started my own educational company called Major League Trading, and I've been doing that ever since. I focus on the Nadex markets and the futures markets, and I pretty much trade every product that they offer except I don't really trade Bitcoin much, but that's the quick pitch.
That's a beautiful thing. And you talk about movement out here today. We get some movement, man, and the bonds are being deviant, but the market itself, man, we get movement everywhere.
Oh, absolutely. Great. And I was warning my members the other day. I was like, we're probably going to get a pullback in all of the markets, get that shake and bake. Everybody knew that interest rate hike was coming, no surprise. But of course, the market sells off, tricks everybody, traps shorts, takes out longs. What do we do the next day? Continuation back to the upside of the trend. So I'm still looking at higher targets in all the indexes here. Big move in the euro this morning off of the ECB press conference. And then, gold's finally getting a little bit of a peak. Same with silver. And I'm also going to be paying attention closely to copper because we had a great run last week in copper, so I'm looking for some pullbacks to buy in that market.
Yeah, you know, it's really intriguing, man. I was really happy watching copper go topside, right? Because it's like, okay, man, you know, we're in the metals market, and it's like this, you know, and then silver went. This gold deal, though, man, you talk about bulls and bears fighting, man. There's some monster sitting up there at like that 13 level. I just said to Tommy, I says, each and every time we're up there, man, who's throwing? They're throwing something at this thing. So, you know, I like the move. There's no doubt, and we'll see whether we can get in that larger, you know, trading range. But
yeah,
wow.
13. I was waiting for that level 1312.8. I mean, talk about specifics. It was just a Fibonacci. I trade a lot of Fibonacci analysis, and that was kind of a fib number I had. But yeah, I mean, it really, until we get above that, there's not much to the upside unless we clear that level. I sent you over a couple of charts to your email. I don't know if you have time to pull them up, but you'll see what I'm looking at.
Try and pull them up for you. Perfect.
Yeah, it's in the email chain we have.
Okay, go ahead. Keep going, Jack. I'll try and pull them up.
What charts did you send over, Jack?
You over a gold chart and an S&P 500 futures chart. So, I mean, pretty much the low of the 21st, so it's May 21st to the high in gold, which was that swing high, came on May 29th.
Yes.
The 50% retracement of that entire move was 1296.3. And that's typically, if I see a nice swing up after consolidation, I'll look for that pullback, and we have held that 61.8 ever since that's traded. And then I'll look to target up towards that negative 23, which would be 1318. But that halfway back from the low of the 21st to the high of the 29th was 1296.3. And you can just see, you know, we traded off that level to the tick a few times. There was a little bit of consolidation we had on, you know, was it June 1st through the 4th. But, you know, we're starting to see the continuation above the resistance levels. And then, of course, you have the event, the FOMC event, that can maybe bring in some fundamental traders who got some bigger position sizing, maybe push us through that 1313 resistance level.
Yeah, we have the chart up now.
Able to get it up.
That is amazing, you know, because, you know, I'm in Mr. Larry Pesavento. I love Fibonacci's too, and he does them a lot. And you know, he's on the bearish side. I'm on the bullish side right now in the market. And I knew this morning, without even looking at the chart, I'm saying to myself, okay, it's going to go up there. Is it going to hold? That's the bottom line.
Sure.
You know what I mean? So
yeah. If he does, so you're talking about gold, he's on the bear side?
Yeah.
Okay, yeah. I mean, gold, the thing is, I was going to say, hopefully you're not talking about the S&P because there's no negative for
no.
Yeah, I mean, you know, right now gold's a two-sided market. I think you got to look at that. I mean, I love being a long-term bull in gold. But right now, this consolidation, I mean, 2017 was a great year for gold. A lot of rallies out of all of the pullbacks. But so far, 2018, we've really been unable to get above that 1360 level. When that does happen, I think it'll probably be the best trade that year, whether it's this year or next year. But, you know, I'm a big fan of gold and shiny objects in general. So I'm on the bull side, too.
How about the length of this consolidation in the gold market? It's pretty amazing. And I'm with you that it's like, okay, we know that once the run starts, you know, if it can make it above this, you can get a good 5 or 6, 8-week run, which can blow people's minds.
Sure.
You know, there's no doubt. Yeah.
Oh, absolutely. I mean, the December run of 2017 into the end of the year, I think it was up like 17 days in a row or something.
Wow. That was heaven. Those
you were having fun that day.
Yeah. Those and the gold equities, of course, they went to the moon. That was a run, man. That was a run. Yeah. Totally. So the S&P, you like the S&P here too, right?
Yeah, so the S&P right now, my upside target based on the levels we pulled back into is going to be 2808, and that's on like a 1 to 2 week time frame, depending on how long it takes to get up there. But really, if we pull back, 2768 would be that level that I would like really love to kind of put some size on if we can pull back and just take out today's low. Now what that level is for me is I call it an extension sequence, which is a high drawn to a high. Now, most people only draw lows to highs or highs to lows with fibs. In more aggressive trends, I actually draw highs to highs. So what that level is for me is the high we broke out of on May 14th, drawn to the current high. That 50% retracement is 2768.5. Put that level on your board. If it trades, look for a good reaction off of it.
Gotta love it, man.
It's good actionable info, man.
You are awesome, Jack. That is some awesome information. We really appreciate the education. It's, man, Jack Gleason, folks, MajorLeagueTrading.com. Jack, thank you so much, man. We look forward to having you on again. This was a great segment, man. A lot of great information.
Thanks for having me. I'll see you guys next week. Take care.
Okay,
awesome.
Thanks, Jack. Have a great
Jack.
one, man. Have a safe one.
Talking gold and S&Ps, right up your alley, man.
Wow! My man, Mr. Jack Gleason. Stay right there, folks. Tommy and I are coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We got a lot of movement out here, man.
We sure do.
You know, that was a great segment with Jack.
That was great with Jack. So MajorLeagueTrading.com, check it out. I know you can sign up, get some free videos over there as well. We look forward to having them back on a regular basis.
The Dow is almost flat.
Yeah,
you know,
we're positive by 8 points. That's about it.
And gold's on the move again. It looks like the dollar is backing off a little. This is going to be wild, man. Watch this whole thing shake out. Natural gas.
Yeah, we'll check back in one more time. So it's almost 11 a.m., 10:55, and pretty much hanging at where we're at, or even rising from there. Now, if you were looking to make that volatility trade, your max loss would be 295.
Yeah.
And so that's not the area you'd want it to be trading to. But, you know, the numbers came in pretty close to expectation, right? 96 versus about 90 billion cubic feet. So not quite the volatility trade you would have looked for today. But there's always another trade.
Always another trade.
There you go.
Thank God there's always another trade.
You got it, man.
Yeah, let's go over. I want to go, let's see, before we end up here, this gold that wants to make another run. Yeah, it's going to make another run. Here we go. Okay, so you're at 13.10. Maybe Jack's out there buying it.
That's right.
We got, well, what is cool is that intraday at 13.13, you get volume up there. So more than likely we're going to see that tested. And what was it? He had 13.12.80. That was the number up in that chart.
Yes,
13.12.80.
Yep.
So bottom line, keep your your eye on that, because
we might be there in 5 minutes, man. The action we're getting.
We know that's how it goes. And look at, so when we started the program,
gotta love it.
The Dow was up, what, 120, 130?
Yep.
You're down 5 right now.
Oof. Nasdaq's still up 46.
Yeah,
quite a number. Netflix at all new-time highs, right? I mean, just across the board, man. Look at that bar. Yeah,
that's amazing bar. That was the dollar index we're looking at, folks.
Look at that move. Wow.
No doubt. Stay right there, folks. We got swim lessons coming up next for you. Then we got our man, Mr. Basil Chapman. Oh, Basil's going to be doing a big workshop
tonight, 6 o'clock. Check it out. What to expect for the second half of 2018. What to expect.
And this market,
watch out, baby.
It's a beautiful thing. And then, of course, we're going to go, man, Mr. Steve Rhodes, Dave White. I'll be back this afternoon, as well as Andy.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.